Well, distinct improvement in the Nifty bank space from a minus 1.5. That index is now minus 0.5%. So it's still down about 180 points, but has pulled up at least 300 points from the morning's low. And that's the sector we are going to discuss. A lot of banks and NBFCs have moved to retail credit because there's not so much of commercial borrowing. So how has retail credit performed or likely to perform with this second surge? There's one organization which has all our credit scores, as I told you, Cibil. Joining us now is Rajesh Kumar, the Managing Director and CEO of TransUnion Cibil. Good morning, Rajesh. Thank you very much indeed for joining us. Well, that indeed is the first question. You all do monitor credit scores and I don't know what is the last date for which you have accumulated trends. But is there more stress in retail credit?
Good morning, Lata. Thanks for having me here. So very quickly, I think first things first, yeah, it's still a little early in the sense that between the two moratoriums and the restructuring, etc., there have been a lot of positive and negative influences on the numbers. So numbers are just coming in. So let me take a minute on the known trends so far. First things first, I think when we talk about retail lending or retail assets, trends in retail assets, there are two important things to understand here, which is the rate of the growth of the denominator, which is the book size itself, the live loan book, and then the rate of growth of the numerator, which are the delinquent accounts, very simply. So if we analyze what happened last year, first things first, Lata, I have to say, having been a career risk manager for 2 decades, if you were to ask me the same question last year in April as to what I was expecting versus now 1 year later when we are sitting and looking back, I must say I am very pleasantly surprised and happy at where things are today versus what I expected last year, April. So some quick numbers around here. First things first, the enquiries through last year, Lata, dropped by almost 20%, which is, let's say for a minute, the shrinkage in the demand, so to say. We've all spoken over the years that between GDP and retail credit growth, there is a rough correlation of 2 to 3 times on the growth rate, right? We've all been talking that the GDP perhaps would shrink 8 to 10%, enquiries shrank by about 20%. But in spite of that, the denominator, the book size, still grew by a good 3% to start with. And apart from the first quarter of April, May, June, where obviously things had come down, the enquiries had come down to almost 90% last April. Today, as we talk, they're down only by about 20-25% today. So there was a nice pickup from the third quarter onwards. Coming to delinquencies specifically, start with the overall numbers for the lending institutions. All the top lending institutions where numbers have been declared, very clearly the difference between the pro forma and the reported gross NPA ranges from 20-30 bips right down to 500 basis points. Quite obvious, that depends on individual lenders' product mix and the segments they operate in. But I place the mode at about 150 to 200 basis points is the difference between the reported and the pro forma. And typically in the historically, again, none of this has any precedent what we are going through right now, but historically restructured accounts, 50 to 60% eventually get written off. And then for a minute also taking a quick look at our own Cibil numbers product-wise at an industry level, Lata, very clearly the secured products as expected have done better. The real increase in the NPA, with the latest reported numbers, are sub 50 basis points when it comes to secured products like home loans, auto loans, etc. Expectedly, unsecured products have taken a slightly bigger hit. The range is from increase of 50 basis points right up to 500. So, for example, cards go close to 400 to 500 basis points in terms of increase in the delinquency, and some products are in between, like two-wheelers, etc., who are at about which are seeing an increase of about 200 basis points increase of NPAs.
Okay, so that's important, and I'm going to focus on that last line that you just gave us, sir. That unsecured loans, there the NPA increase is 50 to 500 basis points. Any other further granular details? Is it largely, are most of the delinquencies coming in from the urban centers? Any further detail that you can give us on exactly this point, what is going on with unsecured lending and across sort of the profile of lenders as well.
Absolutely. So I think if we were to look at some of what happened through last year, and the reason you're seeing this range, it's also important to understand a couple of other factors before I come to unsecured specifically, is that the moratorium 1 and 2 were applied differently, and then across lenders there was a different application in terms of wholesale opt-in or selective opt-out or optional opt-out, right? So there's a lot of difference in the way these were applied over the last year. And when you talk about unsecured in particular, obviously everybody feared the worst in unsecured, and they all applied these moratorium, etc., as much as they could. But specifically, again, going back to the earlier point, unsecured is where we saw a good 50% drop, even as we speak now, even during Jan-Feb, a couple of months back, unsecured inquiries dropped by a good 50%. So like I said earlier, denominator there, which is a book size itself, has taken a good hit on unsecured. That's why you're seeing a slightly higher impact on unsecured to start with. And how that reflects for lenders, obviously, is that a lot of unsecured was going into the salaried segment in the IT sectors in Bangalore, Hyderabad, Gurgaon, etc. Now, you will typically see when you see the trends of inquiries that in these geographies for these products, the drop is much more significant when it comes to unsecured. When it comes to two-wheelers, thanks to some of the challenges on public transport, etc., we saw a good pickup on two-wheelers in the third and fourth quarter. And likewise, home loans, given the attractive valuations and lower interest rates, home loans picked up nicely too in the last 2-3 quarters.
Okay, but the difference is that last time around there was the moratorium as well, right? And this time, if you look at it, even the MSME restructuring deadline has lapsed. So are we looking at more NPAs, not just on retail, but on the MSME front as well, or say over the next 3 to 6 months?
That's a good question, but I think we need to understand that the forces applicable on retail and MSME are very different. So first of all, in retail, most of the moratorium restructuring, etc., is over. Whereas when you look at MSME, the ECLGS scheme had a 1-year moratorium. So actual payback kind of starts only from June. So we don't even have visibility right now to what will happen in the MSME segment. But having said that, since we have a TU Cibil MSME rank, which we call the CMR, we have been studying the downgrades that happen in the Cibil MSME rank. And as of now, we have, remember again, repayment really is going to start from June for the ECLGS side. But we've seen downgrades of about 3% in the bottom ranks, where you see a higher incidence of NPAs. That is CMR rank 8 to 10. We see a 3% deterioration. So we could probably see a 100 to 150 basis points increase in the near future. But the key really, again, is to understand that ECLGS pumped in a lot of credit into the MSME segment. So MSME segment, a disbursement of 8.9 lakh crores last year versus 7.1 lakh crores the previous financial year. And out of the 8.9, straight 2.5 lakh crores was ECLGS amount, and that is still being disbursed. So remember that out of the 19 lakh crore book on MSMEs, almost 9 crores is as fresh as this year's disbursement. So there's nice protection coming into the MSME trends thanks to the ECLGS scheme as well.
Okay.
And obviously, next 1 or 2 quarters, we'll see the trends.
Okay, a very quick last question in that, Rajesh. It doesn't look like the fisc has the capability, or at the moment, not even the intention, for another syringe of money. Do you therefore think that, this 3% of the bottom category, which you said is likely to slip or has slipped, could that be more in the months to come?
Very difficult question to answer, Lata, but yeah, clearly, I don't know about extra flow of credit, etc. The way I am studying the impact of this MSME segment, Lata, is that I'm looking at it as a very simple 2x2 matrix to say, for small businesses, it's mainly capital or cash flows and labor. Let's imagine the rows, and the columns would be typically interventions, which could be social interventions like lockdowns or economic interventions like ECLGS. So now looking at the current trends, given all that we've all been talking about, there is a good resilience. People have learned over the years, over the last 1 year, how to deal with it, etc., etc. So I am hoping that the deterioration is a lot lesser than what was possible last year, and hopefully not more than 25% of what we saw last year.
Okay, all right. On that positive note, thank you very much, Rajesh Kumar, for giving us a lot of understanding of the granular details of unsecured retail credit and MSME credit. There are some important lines running on the bottom of your screen. Bombay High Court ordering or restoring the supply of 110 metric tons of oxygen supply from Bhilai to Maharashtra until further orders. This is very important, though the horror stories from Delhi are a little more painful. We take a break and thereafter we are going to talk to steel companies. R.K. Goel, Managing Director of Kalyani Steel, and Manish Sarda, Director of Sarda Group, joining in. Is there a third steel price hike in April? That's the question.